Hey, Tiffany, how are you? We are
Um,
live.
oh, hello. Hi.
Thank you
Happy
so much for
Thursday.
Happy Thursday to you too. Thank you so much for joining me. We're starting just a little bit late. We had a little bit of technical difficulties, but nevertheless, we are here and we are ready to chat about some really interesting family law and tax intersectional issues, but we're going to focus primarily on the child tax credit. So
Yeah.
before we get started, I just want to let people know that we are streaming this live to Facebook, to YouTube, and to Twitter. It is all under Kinshall Law, so you can go to any of those sites to follow us along. If you hop out of Facebook and want to go over to YouTube because you like the functionality better, you can definitely do that. And then after we finish, we're going to edit this up and make it a podcast episode for A House Divided so that you'll be able to follow along. So, again, I want to start off the show by welcoming Tiffany to the show and remind you all this is an episode of A House Divided podcast. It is streaming live on YouTube, Facebook, and Twitter. And I wanted to bring on a guest, as you guys know I like to do, to talk about issues that affect family law that are not always directly related to my being a family law attorney. And there are other professionals that can provide a lot of insight that sometimes attorneys can't provide. And so today I have with me a colleague of mine, a friend of mine, Tiffany Michelle, the CEO of The Modern Hello. Tiffany, welcome to the show.
Thank you so much for the warm welcome. So I am very honored to be here to speak to your audience. I know that this is a very unique time that we're in right now. I have seen a lot of things happen in the last 2 years that have never happened before. So I'm glad to be a great resource as I can. I do like to help the community. So a little bit about my company, The Modern Hello. We're based on being able to help and empower the individual who not only wants to be an entrepreneur, but also an entrepreneur as well in regards to having control over their finances and things of that nature. So I always like to just kind of preface it with everyone is not built to build and have a business, but you can, in fact, create other streams of income for yourself, whether that is just by learning how to save properly, just learning how to designate your taxes properly and things of that nature so that you don't have to feel like you're in a position where that's something you need to do. So, what does my business do? Just as a sidebar before we really get started, my basis and what I started in was I started in banking and mortgages. I basically helped a lot of homeowners stop their process of losing their homes. So I'm well versed on not only the mortgage origination side, but in addition to the mitigation side for those terms as well. So through doing these actions and helping individuals, I learned that a lot of small business owners are usually the ones who find themselves in a place where they don't have their finances in order and they're a little more difficult to help save. But also just from serving the public, being able to help people through financial knowledge. So what I do is I help people with their taxes and their bookkeeping as well to make sure that everything is delegated appropriately. And then in addition to that, being a credentialed tax preparer, I also build websites and very system savvy. So that helps me a lot as in regards to helping business owners, but also as individuals who have dreams of doing things a little bit bigger. And I also have a small call center that's cloud based. I have a really great team of parents, retired individuals who have the ability to work from home, choose their own clients that they work from to create an additional revenue stream. Like I said, it's not all about owning a business. You may just want to create more income for yourself. So I call myself the Modern Hello because we do everything. We want you to say hello to
Mhm.
us and we say hello to you to help you out. So that's my spiel. I just like helping people. That's what I do, and that's why I'm here today with Alycia.
And thank you so much. And I think that definitely gives us some insight into who you are and what your focuses is and who you like to help. And so you guys might see me kind of looking to the side. What I'm doing is monitoring the comments. So if you guys have questions, again, because this is a live stream, we're going to try to incorporate your questions into our episode today. So please feel free if you're watching on Facebook, if you're on Twitter, if you're on YouTube, make sure that you give us your comments or your questions and we'll try to make sure that either I or Tiffany can answer those questions for you. I want to remind you that Although I'm an attorney, I may not be your attorney. I know that some of my clients are watching, but this episode is not about giving you legal advice. It's about giving you tips and information. So neither Tiffany nor I will be giving you any type of professional tax advice or legal advice at this time, but we will make sure that we provide you with ways to contact us. And I'm going to provide you with some resources. So make sure you hang on to the end. Tiffany has some great resources to help with some of these things that we're going to talk about today. So you want to make sure that you hang on to the end so you can get a list of those resources. So Tiffany, again, we're going to start off by talking about the child tax credit. We know that there are there's been some changes recently to kind of help Americans who are going through, we've all been going through the pandemic. The government has been giving out some quote unquote free money. And we know that the child tax credit is something that is being given to people in advance of next year. And that's going to start as early as a couple of weeks from now, July 1st or the 15th, depending on what resources you're reading. So I wanted to, again, bring you on to talk about that. I wanted to have you talk about what is, first of all, the child tax credit. What does it normally look like? And then what will this change mean for people who may get it?
Correct. So I really love your segue into that, mainly because the changes are really based upon your income. They are a sliding scale. The AGI limits have gone down from what it was before. So even if, let's say, we give an example, if you were in the deficit $1 and you had the credit, it will wipe that away. Most people do understand how the debits and credit works, but some do not. Well, let's say you didn't have any income, you would still get that surplus. And that's really the biggest change. But also, there are some individuals who may not have filed thinking, okay, so I filed 2019, I'm going to file an extension for 2020, and then I'll let them send the payments to me. Well, that will actually hurt you in the long run, because what will end up happening is they're going to do an audit when you go to file for your next year, and then you're going to owe the credit back. So really just the biggest plus to understand it is however many dependents you have, you want to make sure that, number one, you have agreements in place as to who should be claiming. I'm sure we're going to get to that funness. But also you want to make sure that all of your other checks and balances are in place as well. One of the biggest things that I've seen that has been an issue with this credit is individuals who actually claim too many exemptions on their tax forms for their employer. And then it ends up that during the year, okay, that's fine. They get more money in their paychecks, but then they end up in a deficit, or they couldn't get as much as, they may have been able to as well.
So let's break that down. Let's break that down a little bit. So the child tax credit, if I'm filing my tax return, this is something that I would, when I file, let's say 2019 tax returns in 2020, I have 3 children. I'm going to probably claim them as dependents. Let's say I'm married in this situation, which I am, but I have 3 children and I'm going to claim my 3 children in my tax return. How much would I typically get for each child? And does my income matter for how much I would get for the child tax credit?
Not necessarily. It's just if you go over the limitation. And also you did mention that you were married. Would you be married filing separately?
Jointly.
Married filing jointly?
And so the way that you file will impact what you're able to do, what the limits are, correct?
Correct, because they're looking at the totality of the household income and the status that you're looking to file in as well. So if we're going off of a basic timetable, and let's say we're talking about the earned income tax credit, and we're just looking at the limitations alone, you just want to make sure that you don't miss out on any additional credits because of how you're filing. Because if you file separately, now it has to be looked at differently. Correct.
Okay. So let's take what situation most of my clients find themselves in is that they are separated, or they're divorced, or they were never married, but they share a child with someone who they're co-parenting with. So let's say they're filing as single taxpayers.
Head of household, they should be.
Head of household, yes. So if they're single and they're not finally married, because they could have remarried to somebody else, we're just going to say single head of household. Let's say that they share the child with the other co-parent 50-50. What issues would they run into with this new advanced tax credit?
The biggest issue would be if you have the every other year model, and or if you have a verbal agreement, because a verbal agreement doesn't really do anything in regards to documentation. you may very well say, okay, go ahead and file this year. It's not a problem. And then the stimulus portal came out, which, we're going to include in some of the resources so you can get that information updated. But then this portal goes out, and now you filed, you agreed to it, but then you told the IRS that you should receive a plus up payment or you should receive a dependent payment. Now what ends up happening is both of the returns will be held up because it's the same Social Security number. So they're going to need to pull those and look at them. But in the case, just backtracking. So if I'm in a position where I file for next year, let's say, but the credits are coming out this year and it's in advance. This is one of those situations where, unfortunately, I know a lot of people, they find themselves falling out, of a communication loop, and they have to mediate through the court always in order for them to even talk on a day-to-day basis. You need to have those open lines of communication because there's no real way for the IRS to enforce how you're getting the credit based on the advancement. So if I know that I'm supposed to file for next year, but this credit is for next year, there's a chance I'm not going to be able to get it now because it's going to be based off of the most recent 2020 filing. There's only one workaround for it, in hindsight, but that's not a workaround that you want to use because, again, what'll end up happening is you may be able to get the funds now if you tell the other person, listen, don't file for 2020 because they're going to send out these payments and they're going to use the 2019 information. Then someone may fall into a deficit. Then it turns into who owes who, and there's no way to enforce that. So you don't want to fall. So I just want to talk about the good, the bad, and the ugly. So you don't want to fall in that category because, again, someone will owe. And then now it's cat and mouse of who's going to pay out the money. So the best way is to have your own internal conflict resolution where you know what's right and what's wrong. So if next year is your time frame and the advance payments are coming out for next year, that's where you want to kind of come up with a communication method of maybe we split this. I know it's not fun and it is a very gray area, but that's what you chose on the custody agreement. Now, for those who have a verbal agreement, this is where I've actually personally seen in my tax practice most of the issues. Because of the fact we have individuals who feel they should be entitled just because, well, I'm the mother, so I should just receive it. And unfortunately, that's not how it works. If you don't have any type of written agreement whatsoever, it really is fair game as to who files first, sadly, if you don't have something in place and they can't enforce it. So let's say you both do, you both file. Now both returns are going to get pulled. And there's a slew of documentation, which of course we include in the resources as well. There's a slew of documentation that you're going to get audited for. Now, in addition to the audit and your file being pulled, know that in the future, your return may very well get flagged for additional audits for up to 5 years. And they can do a look back. So let's say right now, there are some clients that have come over from like H&R Block and things like that. I usually get a lot of the bigger box because their stuff was just jammed in the system and now there's a problem and they don't even know if that person's probably farming right now, that's not something that they do year round. There are notices going out as far back as 2013, they're auditing for the child tax credits. So you really want to put yourself in a position where you stay on the up and up and you communicate with the other parent in honesty and knowing that, hey, this is something where this can really truly benefit our child. We need to work as a team. And even if you do something like put the money in a joint account for the child or something like that, but being realistic, a lot of people don't do that. They need to utilize those funds now, given the reason they're giving them out is because of the pandemic. But you need to come up with some type of mutual agreement where both won't see any penalties. Because if you fight each other on this and you both file thinking, well, I'm just going to get the money first, well, then either way, you're still going to have a problem down the line. So you just want to be, cognizant of that.
And I think it's kind of important to just kind of break down a little bit of what Tiffany just explained about what the tax credit is for. I mean, again, the idea is that it's supposed to help people who are going through economic distress, right? That's the idea of what it's supposed to be for. So that's first. Second, in these situations where we do have an agreement, so let's say there is a written agreement where one party is going to file 1 year and the other party will file the next year. The question is, what year are you supposed to be filing? Now, I've seen some agreements where there are written agreements where it doesn't specify the tax year. And so sometimes people get a little tricky on that. they'll say, oh, I'm supposed to file this year for this person, but not the tax year. This child tax credit is for which tax year? Is it for 21, 22, or 20? Which tax year is it for?
This is in advance, so it's for 21.
So that means the year that we're in now. And so when you're looking at what is custodial time, and we're going to talk a little bit about a form that kind of breaks down a little bit about what custodial time is. But the way that Pennsylvania looks at custodial time, especially for support purposes, is the overnights. And so that's how they count the custodial time, is who has what number of overnights. In a shared custody arrangement, the overnights can be 50-50. And that's, again, what Tiffany's explaining can kind of become a little bit unclear, because by that situation, both parents have the right to claim the child because they both have the child equal amounts of time. And then you kind of get a race to filing, which I see a lot of. That happens a lot. It's a race to who files first if the parties can't agree who should file. Ideally, they would have this alternating situation if they're able to cooperate, but oftentimes people are not coming to me if they're able to cooperate with each other. So it makes it a little bit difficult. And judges, I can say a lot of courts are hesitant to put into an order who should do what filing because they don't want to get into IRS situations with their limited authority for handling a custody issue or a support issue. But when it comes down to looking at that, you want to look at the year that you're in. So if you have a pending custody case or there's been a custody change in that year in 2021, you want to think about that, who has the right to file, because it goes to what Tiffany is saying. When you get audited and you have to present these documents, you want to make sure that you're thinking about, well, what is right? Where was the child spending the majority of the time? And how does this affect, what my needs are for the child and what the other person's needs are, and how that affects what happens next year. So the person who's filing for 2021 may have elected to not even receive the benefits throughout the year and just wanted to get it on their tax return, and they go to file next year, as they should, to claim the child as they're supposed to, and then they get that flag, right? Because the other parent has been receiving the benefits all of 2021. Let's talk about first.
I was going to say, and I just kind of want to just reiterate, not just the night. We do look at the month and the designation of the month, but also things like school records, doctor's office records. So when you start to go through that auditing process, let's say both returns get pulled, and I've actually had to go to bat for a lot of my clients who've had this exact issue. This is very, very common, unfortunately. But when that does take place, you need to have that in the back of your mind. What can I prove on paper for that tax year? Because the qualifying year is 2020, the advancements for 2021. But if they don't have the 2020 filing, because they do allow for extensions and things of that nature, then they're using the 2019. But you still want to make sure that all of your records and everything reflect for the year that is the qualifying year, which is 2020.
So let's talk about what people are getting, because I mean, that's probably what people really want to know is how much am I getting and how am I getting it? Am I getting this in a lump sum? Am I getting this over time? How am I getting this advanced tax credit?
So it's really actually broken down over a monthly basis. Most people will receive the balance of it for next year. So it really is up to you as to where you are. So depending on the age of the child as well. So I'm going to actually pull it up here. I'm wondering if I sent that to you as well. There is a table. So really it's based on age. And then also one thing that has changed, and I did want to press upon this because we have people who are graduating, right? So it was before your child was 17. If they weren't going to be the age of 17 by 12/31 of that tax year, now they fall out of child tax credit into dependent credit. So that has also changed a little bit as well, which is a huge benefit. So, you just want to take that into account. We have a lot of new graduates. So we just want to take that into account as well. And also, with that said, with the links that with our resources that we have available, you want to make sure that when you did your last filing, number one, I want to caution against two things. This year, we saw an uptick of tax preparers, right? And I use air quotes, and the reason why is because we have people who are ghost preparers. I'm not sure if individuals are aware of that, I work directly with a big company called TurboTax. I'm actually one of their resident experts. And with that said, we see a lot of people who don't know that they have a return filed through the TurboTax system. The reason why this is important because everybody wants to e-file. E-filing is super important and something that they want to do because they know that their filings are going to be received faster than paper. Alone for 2019, the processing has actually been behind with the IRS. They have several returns that are outstanding. There's individuals who are waiting for their refunds. So one of the biggest things is making sure that the person that you are working with does have the credentials to actually do your filings. Now, the reason I'm mentioning that right now in this process is the banking information needs to match up. We saw a really bad influx of individuals who were supposed to receive credits who did not receive those credits because number one, the way the person filed was not correct. So they had the funds funneling through, let's say, their bank account for the business that they were running versus going directly to the taxpayer so that they could be able to remove the funds first, which is not right. And then secondly, if they use a bank product such as an advancement, it may have inadvertently sent it to the bank product like Santa Barbara Bank and things like that, like if they use TurboTax. So if you have individuals who are preparing your return and you don't know what their credentialing is, that can also lead to an additional problem where you go in to log to the portal to see what your payment amount should be. And then you see in a bank account that you've never seen before, which is a huge red flag. So number one, with that, and then number two, with anyone who fraudulently claims you're dependent as well. So I did want to kind of bring that up to the forefront because fraudulently claiming is not the other parent claiming. That's not what that is. But the process is still, it looks very similar to how you would need to prove that, again, you have the proper records in place. And this is a huge, just kind of want to mention there for individuals who say, oh, I'm over the limit, so you claim my children and things like this. Is one of those things where it kind of will rear its ugly head and you won't be able to kind of get those benefits from that as well. So I did want to mention those things. I know they're not necessarily big talking points, but they really need to be because what has happened is people who should not have received the stimulus funds did because of how they filed. And they know that people are just like, oh, well, how much are you going to charge me? And then they just file it so they don't care and they don't look until something like this happens. Number two, having other individuals file your dependents for your children, definitely a no-no. You don't want to have that because this will end up being a problem as well. And then also just making sure that the preparer you work with is credentialed during this process, because when you go in to check your portal to see what your payment amount will be, and if you're qualified, you won't see the right information. So one thing I do want to mention.
Before you go further, can you just talk a little bit about the portal and what it is and what we're able to see in the portal?
Okay. So when you go to the irs.gov/getmypayment, there are a few resources on there. There's a lot of articles that are attached to it. But one of the biggest things is you can put in and you can do the dependency test. It's live and it's always available. So all you would have to do is just put in your exact scenario, and it would tell you approximately what that amount would be. Now, if you have an IRS online account with the Get My Payment, it will showcase to you, number one, if you have a payment that should be going out to you, how much that payment will be and where it's going to be sent, whether it's going to be a paper check or it's going to be through your bank account. And usually it'll have the last four numbers of the account and the routing number so you can see. And if it looks like an old account or something that hasn't been updated, what's going to happen is it will try to send it to it first, sadly, because the IRS is not made to give out money. You know, they're just not in the business of giving out money. But it will reject it, and then it will turn around and send you a paper check. And it takes 4 to 6 weeks to get that to happen. So you always want to go on the IRS.gov site for the Get My Payment, just simply because you want to see what the IRS has on file for you. And then it's also good practice to have an individual account with the IRS as well, because getting them on the phone is very difficult. You know, if you call the 1040 number, you could be on hold for 2 to 3 hours. And even if you're a preparer, such as myself, you could be looking at still 45 to 60-minute hold time for one taxpayer. Because I've tried to do it before where I'll call for like one,
Mm-hmm.
and then just say, so, hey,
Of course.
since I have you
Mm-hmm.
here,
Yes.
can I do
How about this
additional?
one? Yes. And
Okay.
so with the portal, am I able to update my mailing address and
Mhm.
my mailing address and my bank account information? Because again, if people have moved during during
Correct.
coronavirus, or bank accounts have changed, that is this a good time now that we know these payments are supposed to be starting in July? Is this a good time now for people to go in and make sure that not only you're checking to make sure nobody else is claiming your children, but that this information is accurate and to update it now?
Correct. And also, what they're going to use, they're going to go by what your last file return was. That's why it's so important that you use credentialed professionals if you don't file it yourself. And if it is that you file it yourself, that you stay away from certain types of accounts
Mm-hmm.
where you want your payments to go. Now, I'm going to touch base on those type of accounts. There's no shade to prepaid accounts. However, it can cause a problem because now we have additional money going there and you're only worried about getting your lump sum. Let's say, I don't want to mention any company names, but there are some prepaid card accounts that are out there that don't accept all debits and credits appropriately. So it's almost like putting your money somewhere that's very questionable that you can't personally speak with a client, like face to face, like a client professional. So I know that with the times of the digital age, a lot of people like to use the online accounts, but it's just a cautionary tale that actually most of those online accounts that you see it's usually one or two banks. It's not like it's a different bank. It's just
Mm-hmm.
a different cover for the bank, right? So you may have a debit card, you may log into a portal, it may be branded as something, but then when you actually look at it, it will still be Web Bank or one of those larger banks that allow other companies to rebrand themselves. So the reason I'm mentioning that is when you go in to update that information, you may see something that you didn't see before because maybe something changed hands behind the scenes with the branding, or this is an account that you want to keep for the long term. So even when you do your filing, one thing that I always would talk with clients about, and it could be because I worked at a bank and I did
Mm-hmm.
banking for so long, but I'm like, even if it is, small sidetrack. I don't want to get too into the bank thing, but even if it is that you are in check systems, right? And if you're unfamiliar with what check systems is, basically what it means is maybe you had an account at a bank, it overdrafted, the account got closed, and you're like, well, what happens with that? I just can't open another account. Well, number one, that's not true. You don't have to open a prepaid account. But number two, you may very well be in check system, which is different reporting than your regular FICO, right? So for your credit report. But what this does is it allows the unified banking system to look at your social security number and say, hey, this person has overdrafted or written this many bad checks. Don't open an account for them and it will flag you. So
Mm-hmm.
then what happens is you owe that balance to whatever bank that is, and you need to pay off that balance or you can't open another account at most institutions. Now, there are some banking institutions that actually do not rely on check systems. So what you would want to do, just kind of forward thinking, is
Mm-hmm.
if you do in fact say to yourself, okay, let's say I did a green dot card when I did my tax return. But now I know these are going to be monthly payments. Do I want my money going on some prepaid card that if something happens, I can't go walk into a branch and get another one or them print me one and I have to talk to someone in customer service and I may or may not, understand their
Mm-hmm.
dialect. So you want to be mindful of that, but also maybe you want to look at a fresh start bank that will work with you that'll actually provide you with a real checking account, savings account, and things like that. So just as a sidebar, but it is kind of important now that we see the IRS is going to continue to use the account that you utilize for your return. So
And
you
I
just
think
want to make
no,
sure.
good. And I think that's important information to give because I think that we're sometimes, again, we're doing things and not thinking about them. We're filing our tax returns as we should be, but we're not thinking about sometimes the long-term implications of the things that we're doing, especially if we're just used to doing it really quickly. And it's
Correct.
important for you to understand that there are, first of all, there are repercussions just generally that sometimes most of us don't catch because not a lot is going on in our lives that might cause the IRS to flag us for an audit. But in situations like this, where there are changes that could benefit our families, we want to make sure that we're doing the right thing. And like you said, going with a reputable tax planner or tax professional in order to make sure that things are done correctly. So I want to kind of shift back a little bit to the child tax credit. So now we know that we need to have our bank account set up right. We need to check the portal, know who's claiming. We need to think about who's supposed to, if we're sharing custody of a child or children, we should have some conversations with the other co-parent about what's going to happen with this tax credit, if we're going to split it, if we're going to split over maybe a certain amount, because that is something to be considered as well. I want to talk about the difference between taking it now in monthly installments and waiting till next year and just getting it next year. Does it matter if I choose to do that? Can I tell the IRS which one I want to do?
Well, the thing is, if you've already filed, they're just going to go based on your 2020 filing. Mm-hmm. And if you have a new child, they won't know about the new child, so then you can claim the credit all at once. Usually, it's just going to be $2,000 for the qualifying child. So if you go through and you say to yourself, okay, I'm going to go ahead and take the payments on a monthly basis, but I'm going to leave the remainder of the credit there. Let's say it's supposed to be more. You can do that, but they're not giving a lot of feedback for you to be able to choose.
Okay.
And so it's kind of like if they have the information, you filed, and this is what you said you had, they're going to do a disbursement.
Gotcha. And so one of the things I think is important for us to kind of state at this point too is that this is something that is new, is happening in real time. If you go to the IRS website right now, it's going to say check back for updates because there's going to continue to be updates as we get closer to this being implemented. Think back to with PPP. When it first started, a lot of banks were like, hey, we don't even have documents to be able to take the applications. Like we need to catch up. And so you should understand that one of your tax professionals are probably going to be kind of, keep trying to keep up to date with this too and figure out what's going on and the best way to advise you and given your situation. So you want to provide them, if you are in a custody situation, you probably want to provide them with your custody agreement or order. And if there is something in either your support agreement or your custody agreement or order about who's supposed to be claiming the children or child, you want to make sure that your preparer knows about that so that you know what to expect. Because I think that's the important thing is to understand what to expect. And then you also, like I said, Tiffany said, you want to make sure that your information is correct. I want to talk a little bit about what I'm going to see on my side, and then I want to get back to all the resources that you have. So generally, the way that claiming the children works in support cases, often when I'm doing a child support case, I get someone asking me, I want the right to claim the child. And I want to ask the judge to give that to me or the master to give that to me. And I tell them that generally that's something that they're not going to touch, right? They're not going to do that. And for reasons that I stated earlier, they're not going to do that. But you can, by agreement, have that put into your order. And you can, by agreement, have that put into a custody order. Now, when you talked about, Tiffany, not being able to really enforce, especially the verbal ones, but not the IRS not really getting in the middle of enforcing some of these things, what I would suggest to people, again, as we're working this out in real time, what I would likely do is if I have an order by agreement that says who's supposed to claim the children when, and dad is supposed to claim the children for 2021 tax year, which means he should be getting the tax credit. But mom claimed them last year, so she's actually the one receiving it because it's based off of the previous year's return. One of the things is if she's not willing to talk about this, come to an agreement and figure this out, and use the form 8332 that you're going to tell us about in a second, then what I would be doing is probably filing contempt, depending on how much my client cared about the money, is filing contempt because that order by agreement is enforceable in court. And by right, that could prevent my client from being able to get what he's entitled to because mom, either one, didn't know, which is why I suggest that we talk about it first, or two, blatantly decided to keep the money because, this was money that she wasn't expecting to get. And now she has it and they don't like each other and she's not going to help him out. So those are the suggestions that I would give for people who are on this side of it. I would tell people too that if you care about that, and definitely if you're in shared custody situations, to think about having that worked into an order, especially if you're coming to an agreement. And what I generally tell people is alternate years. If it's one child, if it's two children, maybe you guys do one person claims one child, the other person claims the other child until that last child is the only child under 18, and then you alternate years. you can think about these things in advance. And these are things I try to get people to think of. These are when people are sitting down and they're coming to an agreement, they're like, well, we already know what we're going to do. We're fine. We're getting along. My job is really to kind of think about when you're not going to, because those are the things that we find ourselves kind of dealing with later. And it's a little bit hard for the court to fix. But Tiffany, as we get ready to wrap up, I just want to make sure I throw that part out there, but I want to get back to
yes,
the tax
because I have a piggyback
Go ahead.
for that. So in regards to the 8332, my most successful co-parenting client, around Christmas time, the form is available around December. It's when they usually release it. Have the other parent who's supposed to file for the next year, just go ahead and sign off on it. This way you have it before you get excited and your W-2 comes in. You're like, you know what? It's my year to file. So can you make sure you sign the form and just make that a part of how you do things? Because I know with co-parenting, it is difficult. One of the biggest things is being organized, communicating, and having a very solid schedule. So this can be a part of your quarterly things that you do for your child, making sure that their dental appointments are set for the year, or whoever does the coordinating for that, making sure that they're available. Just make this a part of your documentation. School, make it a part of your immunization record. Just make like an end of the year suite. Like, listen, it is my year to claim. You go ahead and you sign off the form. This way it covers each other and you don't surprise each other. And then it keeps the system honest and open. So, and this form is always available. They do make revisions and updates to it, but it's just better. It gives everyone peace of mind, knowing that I'm going to do my filing and I have an 8332. Now, me as a preparer, I have to contest that I have seen either an agreement, they came to a verbal agreement, or that it is okay for me to put the claimant on the filing. And that's me putting my name on the line. And I've actually had in situations where people the other parent has called me and said, why did you, do this, blah, blah, and it's because of a time when, like you said, when they got along, they communicated, oh yeah, Tiffany does my taxes, blah, blah, blah. And I have some that I do both of theirs, and that's great. But that's not going to be every situation, right? So if you can, I would say, get the IRS form at the end of every year, before New Year's, before you get excited about the new year coming. Know that the other parent who's supposed to claim, make it your responsibility to ensure the other parent signs off.
Now,
so this way you're in good.
I think that's good advice, and I kind of want to piggyback on that a little bit too. We're getting into the last 10 minutes, and so I want to make sure we give the resources that you have. But okay. I think what you're kind of touching on is something that we don't talk a lot about when we're thinking of, at least when we're thinking about family law situations, right? If the parties are married, it might be a little different, but if they've never been married, sometimes we're not thinking about wealth creation. We're not always thinking about generational wealth. Now, sometimes individually we think about it and we talk about it, but we don't always think about what that looks like, what those conversations look like with the other co-parent when we're not together. And I think talking about this particular form, more than just who gets to claim the child on a tax credit, this is the beginning and part of a bigger conversation about planning for wealth, about having conversations around co-parenting that leads and sets the child up to be doing well for beyond. Yeah, because in Pennsylvania, college does not have to be included. It's not part of child support. And so oftentimes that's a breakdown. It can be included in a property settlement agreement, and then it can be enforced that way. But other than that, there is nothing that requires another parent to pay for college, for example. So I think we need to, and we need to normalize having these conversations for these children that are born into either households that were never together or households that have become divided. And that's kind of what the goal is here. Is the idea is that even though you're separated, you're still a family, and there's still this child that needs to be taken care of. And if we are talking about creating legacies of wealth, and financial literacy, we need to be having these types of conversations without the animosity, without the issue that may have caused the breakup to begin with, and really just focusing on what's best for the children. So, but I'm glad that you're, because I think in your situation, you have the ability to do that. And sometimes it is just saying, going that little step and say, well, think about it this way. This is
I
still a
do.
child that needs these things. So yeah,
I
so it's
do,
good.
and I know we have a limited time, but part of your package, your love package you receive with your children and creating that wealth is making sure that you have different things in place. So the insurance policies, making sure the children does have, life insurance policies, even for yourself, making sure that you have the final expenses, making sure that even with this situation where you're getting a surplus of funds, are there things on your credit that you need to kind of clean up so that you can be ready? Maybe open a 529 college plan and have the whole family help to save. And this is a good time to put a good lump sum in while this
Yeah.
unexpected money has come in. So even just like you said, just the tax planning in itself and just looking at the full financial picture, credit is a huge part of it. Being able to make sure that you have, lines available if you want to add your children onto those things. Just these are the conversations that I have. It's not just, oh, okay, this is how much I can get you back, but you want to make sure that you look at your full financial picture. And this is a very good time to take a step back. I mean, we all sat in our house for a year. If you're sitting back and you don't have an insurance policy in place, your credit isn't where it needs to be so that you can, in fact, sign on for a Parent Plus loan. If you haven't filed your taxes in years, if you have things like that are going on, this is a time to kind of pull those things together and get them corrected for the sake of your children, not just the monthly payments, but, using this as a real leg up, because this area that we're in a middle area. Most people are middle class, but it's very difficult to make that big jump and that leap if you don't have the same components of some of my wealthier clients who do. They have these things in place and in order. And just making sure that you have all the proper policies in place in the credit. I can't even stress that enough. There are programs out there, even if you don't have a home yet, first-time home buyer programs. There are programs out there where you can get your rent reported on your credit report to help you build. You can get secured cards. I have these conversations with my clients because it's not just about the tax filing. I use that little one appointment a year to kind of sneak all the stuff in.
Good. And I'm glad you're doing it, because we do need to do that. We need to have these conversations. We need to have these reminders about it. And I think, as professionals, we do have, we sit in a unique positions, right? Where our clients are coming to us because they esteem us to some level. They believe us to have some idea of what we're talking about. They believe that we are knowledgeable. And without preaching or definitely putting our own particular beliefs on them, it is an opportunity for us to think about what we say to them. And for me, definitely with families, I'm often thinking about what is it that I'm talking to them about in families. And that's why I made the House Divided podcast. You're a divided house, but you are still a family. And I think that the more that I talk to people like that, the idea that you're still going to be a family with this person, you still have to have some interaction, and you can choose how you want this to be. And I don't need to make it worse for you. And I think that that's the same thing that you're doing, is saying, you can come to me just to file your tax return once a year, but we can have deeper conversations about what it means to be financially literate and to build wealth. And I think and it's a great time, like you said, every year to do that checkup and make sure you're doing that. So Tiffany, before we wrap up, can you talk a little bit about the free resources? And then I want to make sure that everyone knows how to reach Tiffany, because you've heard her talk. And I know that we go back and forth. We were having a great conversation even before this started. I'm like, well, we should just be recording this. About, you want to talk to her more about, some of the things that she's doing, not just with the tax preparation, but some of the other things that she's doing as well. I'll make sure that she provides you with ways to get in contact with her for that. But can you talk to us about the free resources, Tiffany?
So some of the things I sent over, number one, the portal that we mentioned earlier for the Get My Payment. While you're cruising on the IRS website, because that's a fun place to be, right? I mean, I love it. I know we don't, but go in and create an account for yourself, because sometimes what they do is a double verification where they snail mail you a letter that has a little code. You think they could email it, but they can't. So you want to be ahead of it before. So even if you get off this live stream with us right now and you go to create your account and it says we need to mail this to you, it's going to take 5 to 7 days for you to receive it. So they'll still give you enough time if you need to update your information in the portal. That's number one. Number two, I did send over the information about the 8332 form, just so you can see what that looks like. And it gives you a link to the most updated PDF, so that you can print those off and make that a part of your parent package. that you have with all your documents that you're keeping track of for your children, right? And then also the free filing program. Now they have changed it. There's a few different tax preparation companies that have kind of included themselves. I'm a little impartial to Intuit because I've been with Intuit, doing things with them for years, since 2015. I'm one of their credentialed professionals. But they have a free file program and it's really robust. You can even get live assistance if you need it. So that I included that as well. And then also, if you have not filed and you want to at least try to get an extension in there, although it should have been done by the tax deadline that was extended, I did include the information there for you to file for an extension. Now there's a form, it's free, print it off, send it in, even if it is a little bit late, because it's already the first week of June. But go ahead and do it anyway. This will at least give you until that October time frame when you need to get everything else in. Because even if you are behind a few years, start today. Start today to correct the years of problems so that at least you know where you're going to be headed. So I did include all of those. I think that was pretty much it.
And I'll make sure what I do is that I've been kind of putting them on the screen for everybody that's watching the live stream. And then people who are listening to this later on as a podcast episode, I'm going to put this in the show notes. So that way you'll be able to just go right ahead to all the links, and I'll add the additional ones that I haven't put on the stream's screen so that you can see all the things that Tiffany is recommending or at least providing for you guys as resources. And I think that's so important what you just stated, Tiffany, is that we need to give ourselves grace. We can't undo the past necessarily. We can't go back in time. We can't fix it. So give yourself some grace. If you haven't filed, it's okay. Start here. Yeah, exactly. So do what you need to do to start making steps to get in the right direction. Today is a new day and move forward. Yeah, like just do it. And just know that by taking this first step, you're going on the right path to get what you need done versus not doing it at long and allowing it to continue to fester. So
and just as another resource, when you are on the IRS website, use the search tool. It is very friendly. It's very user friendly. They spend a lot of money updating the site, and you can go in there and you can search for the dependent tool, and it is going to take you through the tax assistant where you can put in your exact scenario. So it will give you as close to what your expected amounts will be.
Awesome.
So you can calculate it.
And Tiffany, thank you so much. And what we might do, we talked about this as well, because and July 15th is our date, right? July 15th is when we can expect the payments to start coming out, right?
Yeah.
So again, this is the time frame. So it's the beginning of June. It's time for you to do what Tiffany said. Go into the portal, check, make sure everything is correct, because mid-June, we're going to start seeing those payments come out. And like Tiffany said, this may be a great opportunity. If you don't need the money, maybe you should consider just putting that money away into some type of savings for the children, into whatever other investment vehicle that you think makes sense. If it's a 529 plan, or if it's something else, if you're not going to need the money, you're not going to, if you don't need it right away, maybe think about how you can use it to invest in your children's future or some other way. But Tiffany, how can people reach out to you, learn more about you, or to work with you?
If you can, I'm excited about this. If you can visit my website, it's very easy. It's just www.modernhello.com. Same name on Facebook, same name on Instagram. And my name is Tiffany Michelle, of course. And then you can email me, Tiffany at, which one do I use? Tiffany at modernhello.com. Make it easy on people. Yes, that's me. So you can see everything that I do for the community, and that's for everything. If you're looking for a job opportunity, if you need additional income, if you're looking to start a business, if you just have questions, if you haven't filed in some years, you don't want to openly say it, I'm not a judgy person. I'm just a person who likes to come up with solutions to fix it. You can contact me there, and I have it where it's online scheduling appointments to do things virtually. I do have two offices. I have one in Horsham and I have one in Elkins Park. So I do face-to-face very sparingly. I'm just kind of creeping back in there, but I do things virtually as well, to kind of accommodate individuals who need that kind of time restraint.
And I'll make sure, like I said, I'm going to link to everything in the show notes so you can find Tiffany, reach out to her to get assistance. Again, start where you are, and judgment-free zone. We're going to just get started. All right. And I want to remind everyone, I want to thank you for watching the live stream with us. Thank you for the comments. And I hope that you found this helpful. This will be a podcast episode of a House Divided podcast, wherever you listen to your podcast. And you can also find it at kinshallalaw.com. Make sure you hit subscribe, leave us a review. And most importantly, let me know what else you want to hear from me. The idea is that this show is here for you. The idea is to give you some resources, some tools, bring on some excellent guests like Tiffany, who can talk to you about things that intersect with family law, and that is divorce, custody, and support. All right, until next time, thank you so much. Take care.
Thank you.